Hey, hi everyone. Welcome back to my channel Techno with Sudeep. I'm Sudeep Shetty, and this is our third episode of our Dynamics 365 Finance and Operation Beginner series. Today we're gonna dive deep into the what we call three C's: chart of account, calendar, and the currency setup. These three are very foundational to any specific legal entities, and this configuration has to be done if we have to move forward to the other specific modules. Having said that, just to remind you guys, what we have done so far. But we created a legal entities. We also created a number sequence. This has all been covered in our previous episode. If you haven't watched it, please go through it and watch it and come back to this session. As I said, we are going to today we're going to more concentrating on three C's: chart of account, calendar, and the currencies. Once we configure this one, we're going to map this aspect to the ledger setup, and we also discuss why the importance of the ledger setup, and also we're going to talk a bit about the account structures. Account structure is other aspects which we're going to cover it. So with that, let's jump straight to our first thing is called chart of account setup. Okay, so for the chart of accounts, you have to this this is related to the finance, so it's the module which we are currently will be looking into is the general ledger, is where you're gonna see, we're gonna see there's a two thing. We call it as a main account and the chart of account. So let's jump to the chart of account now. Again, guys, don't get confused here, because this is a very fresh company. The people might assuming that what the hell is this, all this we haven't even tested, we haven't even created it, but we could see all these specific Brazil, Chinese, and the French and the India chart of accounts list. But don't get confused, as we already talked about, finance 365 operation is a multi-legal entity, supports multi-legal entity, multi-legal currencies also being supported. So you have an option to share, because as it supports the multi-legal entities, it's a common sense to understand this. Then you create certain aspects in one company, you would expect that to be get flown into other companies, rather than keep creating the same repetitive steps in other companies. As Microsoft provides the options to share this, you could share these things in the other companies also. That's why this possibly there are tons of companies in the environment I'm currently working it. So possibly people are, people who configure this one, it's also been said that this will be shared in across all the companies, whether it's been already created and will be created in future, will be get shared. That's why you could see it. Now, the first thing is that we have to create a chart of account. Now, in any ERP, if any of you worked on any ERP, right, the chart of account is a chart of account, where we call GL accounts. But in this finance and operation, there's a bit of a difference aspects to it, because here chart of account is not a GL account, or not the account with the transactions happens. The chart of account here is a kind of a folder. You could call it as a kind of a folder. Inside, you create a folder first, and inside the folder you put all the chart of all the main account or the GL account inside to it. So that's what chart of account is in respect to uh, D365 finance and operations. So don't get confused. Chart of account is just a name you're going to give it or group it, where you're going to group all your main account or the GL account insides to it. That's what we call that as a chart of account, right? To create a chart of account, you're going to click new, and I'm saying that this is my GS chart of account. So I'm just named it as a GS chart of account. Give the fancy description: chart of accounts of main accounts related to GS food. GS. The main account mask is one more thing that you could put the main account mask like this in a hash key. This is to say that if you put, like as an example, I have put the 5 hash keys. That means that whenever you create a main account, that means it should have a 5 digits thing. If it is below than that or more than that, system triggers the error. Just to show you on that aspect. Right now it has a 5 digits. I create a new, and I say main account 1, and if I save it, system gonna trace main account must have 5 characters. That's what it does, right? So I'm just deleting it now, and I remove the main account mask, which is kind of is not really required. Now, once that is been created, I created a chart of accounts. right? I just created a folder called GS chart of account, and inside that GS chart of account, I'm gonna create all my main account. Now, what is this main account? There are some people might not be very hands-on with the in the chart of accounts and the GL accounts and the balance sheet and other stuff, finance aspects, right? Just to for those people who don't really understand this, just to trying to understand this one, what really does this one. Now, any main account, right? I'm just bringing my file, what I have created for you. So I'm going to create all these main account in this specific company. So just to guys, you have understand it. Any company, if when it gets registered, legally registered, they have to maintain their accounts. When I say main, they has to maintain their accounts. The accounts is the a phase for the organizations to show how they dealt their operations, business operations in given year, right? All those transactions has to be get captured somewhere, and that's all been get captured in the balance in the chart of account or inside the main account. And that in the and when I say main account, whenever you transact anything, like example, you paying a electricity bill, you sold something, and you purchased the machinery, you purchased the inventory, you purchased you sold something else, right? All this has to be captured somewhere, right? This is being get captured in the main account to just to track our expenses, track our income, track our asset, track our liability, right? So any chart of accounts, or the balance sheet will have a five aspect to it, or probably more, right? So the five key aspect here is the asset. It gets the balance sheet always gets divided into asset, liability, and the equity. So what is asset? Asset is nothing but what company owns it. For example, to give an example, a cash company may have a certain cash in the bank. If they have something in the bank, they have to track that or record it in their book. So that's been called as an asset. What they have it. Petty cash. Okay, I have some petty cash in my office that also needs to be get captured, recorded. So that's what comes to the asset. Asset is something, in short, asset is what you have, guys, right? If you have something, that's an asset for you. The same thing like inventory, right? Raw material inventory. You purchase raw material, you got that into your warehouse. That means you have the inventories. You have the finished goods. You produce something, right? You have it. So that's an asset. And a fixed asset, a machineries. That's you purchased a laptop or the computer. That's you own it. That's what the asset is all about, right? So this is what the asset is all about. And the liability. When your company, as you own it, you also owe something to outside people, right? So what you owe to others will be called as a liability, right? Means that you purchase something, yeah, inventory, raw material from other people, right? Because you don't really produce that thing, you don't really own that thing, you have to purchase it from the market. You purchased it. When you purchased it, you have to pay them, right? So when you pay them, you need to track that record. That is something you're going to track it in the liability side. So accounts payable, the payable name itself says that you need to pay. So all this what you need to pay will be recorded in this specific chart of account, right? The loans payable, yes, you took a loan from the bank, that's been captured in the loans payable because that's a liability, you have to pay them back, right? So we'll call cover, as that GST payable. We'll call come what is this GST, and also income tax payable, that you need to pay an income tax to the government. So that's whatever you owe, whether it is to the government or just to the other third party people, it's called as a liability. Then we have a equity. Now equity is neither an asset or the liability, but you usually call an asset is equal to liabilities plus equity. Equity, what it means that, what remains for the owners after the liabilities are subtracted from the asset. What does that mean? That means you owe something, and you have something. If you minus asset minus liability, that's your equity. Equity is all about the owners, what they put in money, what they're putting the money in the in this business. That's what the equity is all about. Retained earnings is nothing but, after we'll come back to this, but when you pay to everybody, right, whatever you, after the end of the year, you will either you get saved, because either it will be a profit for you or be loss for you. The profit and loss will be get captured in the retained earnings. So that's what, either it could be a retained earnings or it could be a retained loss, whatever it is. So that's what we call it as a equity. So asset, in short, assets what you have it, liability what you owe, and the equity is something what owners of that company has invested in this business, and what's the profit has been taken out after the after they, what has been remains after the owners of the liabilities are subtracted from the asset. That's what we call as a balance sheet. Now, in the any book, it will have a balance sheet, which we talked about asset, liabilities, and the equity, right? And also we will call it as a profit and loss. So profit and loss account. Now, what is profit and loss account? So in this profit and loss account, there's two aspects. Either an expense happens or the income happens. When you say sold something to outsiders, that's your income. That will be captured under the revenue account. There will be a expenses, like you're going to pay to the salaries, you pay the rent, utilities expenses, that will be captured in a expense account. So there is a revenue account in the profit and account or the expense account. All the revenues will be captured in the revenue accounts. All the expenses will be captured in the expense account. Now you might be thinking that, this guy just told that what you owe will be captured in a main account. Just imagine that, right? You, for anything, for any book to maintain, you will have a debit entry or the credit entries. So debit and the credit entries happens between the asset and the, the balance sheet to P&L account, or the between the balance sheet account, or the between the balance sheet and the P&L account. When some gets hit as a debit, and I say that debit accounts payable account, right, or the a credit accounts payable account, you need to debit that expenses somewhere, right? Right. So for example, a salaries and the wages, you said that I have to give the, I need to pay a salary to person A. The person A can be a vendor or the employee. So there could be an employee payable account. You could say that I need to pay to the employee payable. So you capture that employee payable as a debit there, or credit there, a credit to employee payable account, and you say that debit to my salaries and wages account. That's how it works out, right? All the expenses we're going to cover in much more detail in a, other, finance series, right? We're going, and then we're going to talk much more in detailed way about all this aspect. But we need this chart of account has to be maintained in the uh, as a setup to move forward to the other areas, right? So in short, you have a balance sheet, asset account, liability account, and the equity account, and the profit and loss account is the revenue account and the expense account. This should be maintained. Let's create some of the main account, right? So if you click a main account, right? So I could click a main account and I could say that I could go back here and I could say that let's balance sheet, and I could create this one 1000, and I could give a name. And in this thing, you could say that, what is this? So it could be an asset, or it could be liability, or it could be an equity, or it could be a profit and revenue or expense account. So I'm going to say that this is my asset account. We're going to discuss, guys, all of the specific fields we're going to discuss in detail in a specific in the finance series, right? I'm not going to spend much more time on that. So only thing which you need is that put the main account number, name, and put the right account type and just save it. There's also possibility that, one more thing, that if I click new, I could also group it something, right? I could say that this is my asset. I said this is my asset, and I said that this is for just for reporting purpose, and is that it's a header. So if I say that, it will all group under the asset. I could say that, okay, this is all the assets which belonging here will be grouped under this. This work as an header. You could make it very fancy. I would leave you to uh, play around it and understand it much better. I just show you that how this reporting type can be used. Reporting, when they say, then I say reporting, it will not belong to any asset and liabilities. It doesn't those accounts will not be included in the when you run the balance sheet and P&L reports, right? So reporting, and you could say that it's a header, as an empty header or whatnot, page header. You could group that way. That's way you create it. So when I come back here, you could see that asset, this will get created. If you want to create a one more thing, I could add this one. Let's add a couple of things, and you could add petty cash. This is coming out very nicely, and I say it's an asset. I could save it. Now there's a couple of way you could do that, right? So either you're gonna keep typing it manually, right? Or there's another way you could do that. So just when I say another way, you could simply import it easily. So when I click new, you could click on over here, open in Microsoft Office, and you could click main account, and you could say download. It it can be saved in the my desktop. Let me go back to the main. Since I'm opening this main account, let's give a couple of seconds. This gets opened. First, I will do enable editing. The first thing you have to do is that you need to log in. Sometime it doesn't really logged in. So if you gives an option to log in and put a login option, then just fill it in our values. So mine is that this one. So let me add all these values. So I already created this one. So let me put these values here. Okay, and I put the name, account receivable, and I'll say that this is another one. And I say that this is an asset, right? The main account type. You could always, when you click it, that options will appear here. Asset. So I'm gonna say that this is all asset, my account, and this is my liability accounts, right? So also added this one, asset. Okay, that is should be fine. You're gonna add that one, and also you need to let's go back to this 1 hour thing. If we go back and we say that this has to belong to GS chart of account, right? So chart of account name, just put this GS chart of account and just add this one. So we added it, we put this one. Let's add all other stuff also. Right, so let's add, and we're gonna add this one also. Do we have an equity? Yes, we have an equity option. So add this equity, add this GS chart of account. Let's add some this one. This one. I'm gonna add some of the important chart of account. Then I'm going to do it this one in offline for you guys. But you should be getting an idea how it can be done. It's just a matter of putting those numbers and the description and putting your GS chart of account list, right? And and just making sure that this is a revenue account. So you're going to say that this is my revenue, the and this is your expense account. Yeah, this is an expense. This is the gain, realized gain. So let's put this one. I'll come back. What is this realized gain and expense account shortly? Okay. So once you all loaded this one, have I loaded everything? Yeah, let's load this one also. And right, and you just put expenses. We all discuss this specific chart of accounts when the time comes. So don't worry about it. But make sure that you add all these chart of accounts in the main account list. If you want this, let me know, guys. If you want this chart of account list from me, you just just put it in a comment, and you or send a request to my email ID, which is in my profile. Just send an email, so I will send this Excel list to you guys. Right? Once you fill in everything, just need to do a publish. Right? So when it says publish is successful, working updated. Now, if you go back here and you come back here, and you could see that all this chart of account has been created. Pretty simple, pretty quick, right? So one thing is done. So we have created a chart of account has been created. Now let's go back. So 1C is done. So we created a chart of account. We created a respective main account. As I said, chart of account is just a matter of folder. Yeah. And main account is inside that specific chart of account. What all the GL account you're going to keep in, you're going to create it in a main account. We're going to come main account categories is nothing but you are grouping your account. Once it's become asset and the liability inside the asset, there could be a you could subdivide it into further what type of asset is, or what type of liabilities. Is it a short term liability, it's a long term liability or not? You could group it all things very nicely. We'll all come back later on this on these things. uh, all those things we're gonna come back. That's been done. After we done that, then we're going to create the a fiscal calendar. Now, what is this fiscal calendar? Why we need the fiscal calendar? To say that fiscal calendar is a year, a 12-month year, or it could be a 12-month, or it should be a total 12-month year, where you're going to create this as a calendar in the system, to say the system that I'm going to capture all my transactions going forward in this specific period, right? So to give an idea that in India, usually your financial year starts from 1st April to 31st of March. If you go to the US, it could be a June to July, right? This will be might be July. It might be start from 1st July, ends on 30th of June. So every company has their own financial year to run it, right? They have to, because they have to show a book based on that specific year. They have to pay to the certain things to the government, right? The government officials only look into that specific financial year. What's their profit, and whether they paid enough tax based on that. What's their sales tax? What's the GST input or the GST output? All these things will be calculated. They need a certain period to understand this, right? Otherwise people will run for 2 years or the 3 years or the 4 years, then the book never get closed because the operation is still running. They're never going to show the results to what's been happened in the last year, the last quarter. How they even come to know that this is my quarter, last quarter, uh, this is my transaction, this is my profit? How they could know that? So for that they need a accounting period, a fiscal period, right? So that's what this fiscal period does. To create a fiscal period is pretty simple. You just click a new calendar, and you just name a GS 2025. I'm going to create a calendar for 2025, and I say that my uh, thing will get started on 1st April to 31st of March, and I say that length of period could be 1 year. It could be, look, people, look, guys, it could be a monthly. You could create a month fiscal period for per month, or it could be a per quarter. This is up to you guys, up to the company how they want to manage it. But usually the thing is that it will be created per month, right, for each month, or it could be created for a 1 year. Everything can be created for a 1 year, right? Or it could be created based on the weeks also. That's a possibility. But the month is the most used one. So you're going to create that one, hit create. So when you hit create, you could see that your accounting periods are gets created. Now you could see that accounting period starts with the period 0. It says 1st April to 1st April. Usually it happens because when you have to do a opening, you have to put certain opening balances. You're going to use the period 0 and post those transactions here. And from the period 1, you're going to start the first transaction. That's how it's usually structures in the finance and operation. And it also, you need a one more period to close it, right? So the period 13 is the closing. For all your closing balances will be get posted on the period 13. Even it makes sense that you could still use period 12 and to close it on 31st March, but it's make more sense to you close that everything period 12. Then if there's any adjustment has to be done, you could post it on period 13. That's the idea behind it. Don't get confused. Just understand how it needs to be gets created, what's the importance of the fiscal period. But we'll all come back again. I'm again saying it again and again that we're going to cover much more detailed way in the finance and operation sec in the sessions, right? So you created those things. So I created a calendar. Then the other thing is that you need to create a currencies. Again, you're going back to the same model called general ledger, and you will find under the currencies, you kind of find the currencies. Usually, as I said, these companies are all multi-currency supported. All the currencies of the world is already been gets created. Just look around it. If not, you could see that INR should be is already there in this thing. So INR is there. It's just a matter of creating it. Currency code, and you put your codes here, and just make sure uh, code and the name should be fine. And you could also put the symbol. What makes more sense to you? Just create those things. So once you created this thing, like uh, what we all created, we created a fiscal calendar, we created a main chart of accounts, main account, and the currencies. Once all this been done, then we are going to go to the ledger setup, right? Ledger setup, and we go to the ledger. In this ledger, all the things we have to do is that map those things what you have currently created. I'm just to create my chart of account. I'm going to map my chart of account here, GS chart of account. And now I'm going to create a fiscal year what we created. That's GS, and I said GS 2025, right? So I'm going to save it. Yes, so it says that account currency must be filled in. Oh, yeah, let's go back to the currency, accounting currency. This legal entities is created in India, so of course makes sense that I put this in INR. The reporting currency is one thing, I could. So you have a, even though it's accounting currencies, right, in INR where your day-to-day operations will happens, but when you are reporting it to somebody, reporting either to internally, or it could be reporting to the external people, you want to report it in a USD, right? Or it could be a different currencies, whatever the currency, or you could keep the same currencies, doesn't matter. But you could certainly use that either reporting currency as a USD or reporting currency as a INR itself. This doesn't matter. It's just a matter of showcasing your your book in a different currency other than what is been already be, how this your transactions have happened. If you want to do that, you could do a different one, right? So I will also, let's for in our case we'll put USD thing, right? Then when you're putting a reporting currency, then you need to have a currency exchange rate also, right? So you could create the exchange rate, or you could use the one which is already been there. I'll come back on this. So you could do that, yeah. Then let's save. When you save that, it gives an option. The fiscal calendar has been updated. We recommend you to recalculate the ledger period access process. So because you just put the fiscal calendar and the chart of account, system has to create a ledger period. I will come back to the what is ledger period. First, let's create this ledger periods. Okay, let's give a couple of seconds. It should be get calculated pretty soon. So your ledger accounts is ledger periods are gets calculated, right? Uh, so let's complete this. What is this ledger period? Now this is very important, guys. uh, Probably a good interview questions for you also. So there's a two thing. One is a fiscal calendar, and the other is a ledger calendar. There's always a question comes if what is the difference between these two. Fiscal calendar we already talked about. It's a fiscal calendar is a calendar where your company's fiscal year will be get recognized when the fiscal year gets started, when the fiscal year get ends, so that your books gets closes and you have a right uh, your books gets closes and you will get a meaningful output from the that specific book. That's what called the fiscal calendar. Now the ledger calendar is that it's only get enabled when you assign that fiscal calendar to a ledger setup. In the ledger thing, when you set this up, when you put this up in the mapped it, then this gets enabled. Now you could see that when I get enabled this GS 2025, it creates the period. It has a period of 13. So ledger periods gets created. Once this gets ledger periods get created, you have an option for each period to manage it. Right now in this, if you could go to the period 0, it could say says that permanently closed, that period has been closed. You cannot post any specific transactions on that specific period. So you have an option to restrict the user whether to post the transaction on that specific month or the not. This is something can be managed in the ledger period. This could be a all ledger, this has a lot of options, guys. If you could see here, for this specific period, whether all the ledgers are allowed to post, or whether the sales transactions is allowed to post, or the specific bank transactions are allowed to post, customer transactions are allowed to post. You could manage it, or you could control it, right? All these things in the ledger calendars. That's the difference between the fiscal calendars and the ledger calendar. I repeat again, ledger calendars only get enables when you assign the fiscal calendars in the ledger setup. When you assign it, system asks you to recalculate and create the ledger period. It creates the ledger period. Once the ledger period gets created, then you come back to the ledger calendar and control it, whether you would like the user to get post those transactions on that specific period or not. That's what exactly what does the ledger calendars do. Right? We're gonna cover more again in the future sessions. That's what ledger calendars does. Now let's go back to the ledger setup. Right. So we are about to talk about currencies, right? Currency. So we could have our let's create. No, I have used the one which is already was there, but we can create a different one. Let's like we say that GS exchange rate, right? And you could put the exchange rate, right? So right now for Innova case, I'm going to put the exchange rate for the from currencies and the two currencies. Of course, I want to from USD to INR, right? And I'm going to say that what's my exchange rate on the specific date, or you could say that, you know, from whatever, from July 1st, this is my 85 INR for 1 USD, right? You could create that. You could have a for each day you could create your own exchange rate, and whenever the transactions gets processed, system could look into this. What exchange rate I need to pick it up. And for example, I put it on 1st July is 2085 as exchange rate. In the 2nd July, I don't have an exchange rate, or in the today is the 16th July. If I don't have an exchange rate, system gonna pick it still on the 1st July, right? Because it couldn't the latest exchange rate it can find is the 1st July. System gonna take it. So you can put the options, right? So now you could use that GS food what we created. So GS exchange rates. So I'm going to also say that this is GS exchange rate. Let's save it, right? Then we have an account structures. It's not really a good time to discuss about this account structure, but let me give a basic idea what is this account structure is. Now, as you may know, we talked about the balance sheet accounts, expenses, and the income accounts, right? Now, before the this concept of account structure, in the each ERP we call it as a different things there. Some ERP call it as a dimension, some ERP calls account structures and other stuff. So you could have a kind of a extra details. You could tag it whenever there's any transactions happens in the ERP. What does that mean? So example, there's an electricity bill come to whole company, right? So you have an office and the electricity bill had came. Electricity bill came as 100,000 rupees of electricity bill had came. Now, if you want to see that, this 100,000, whatever the electricity bill come, you want to distribute this 100,000 expenses to each department, specific department. Now, there's a two way you could do that, right? So 100,000 can be divided equally among 25% each. Let's assume that you have four department. Now, for each four department to identify these transactions, either you have to create an individual chart of account in the system, right? Or you could have only one chart of account. If you have only one chart of account, how it could possibly you create, you identify this that 25% is belong to IT, 25% belong to some other department. That's how these account structures and the dimensions come into the picture. You could have your own dimensions and you could tag that dimensions in the each transactions where it will be helpful for you to analyze it in a later stage. you know, right? Otherwise, you will end up creating a multi chart of account just to capture those transactions, record those transactions in the system, which doesn't make any sense, right? Doesn't what does it make sense to create a number of chart of account based on the project? Let's assume you have thousands of projects. For each project you have to capture the expenses. Will you gonna keep creating a project as a separate chart of account? Doesn't make any sense, right? Or create a chart of account as a dimension and you attach that dimensions in the transactions. You're going to capture that. Okay, I had a salaries to be get paid for this thing, and this being paid to this project. So you got a detail. So you're tagging that project number when you're anyhow you are to capturing the salaries to be paid. So you get a more understanding, more details comes out from these dimensions when you attach those dimensions in the thing. So to create an account structure, right? So let's go back to the again general ledger, configure the account structure. Let's create a new and then account structures. Let's create GS account structure. GS. It's gonna create and I'm going to add a segment. So segment is nothing but a dimensions. So I'm going to say that my dimensions are business unit. So add dimensions, and I'm going to add one more dimensions called cost center. So I added two cost centers. Okay. Now in this account structure, I could say that now this business unit and the cost centers are allowed only this specific main account, or it could be from this main account to this main account. This business unit is allowed to use it, or from the other business unit. Because for example, cost centers, when you're capturing the income, will it make any sense to capture the cost centers dimensions in the income chart of account? Doesn't make any sense. It only makes sense when you're capturing the expenses. So that level of details can be limited. You could perform it in a way, or you could configure it in a way that you could limit which chart of account, which range of chart of account will be allowed which specific segment is nothing but a dimensions, right? So but we are not going to do that right now, but just an idea. We'll cover it when we in the finance and operations sessions, right? So it's again, for each, like an example, in a cost center, you could say that whether the blank values are allowed or not whenever you post any transaction. and you selected a specific main account. You're going to tell that with the main account, okay, I said already said that cost center is very much required, but still you could say that okay, for some time maybe the blanks are allowed. If that's the case, you could keep hit the blanks are allowed. And I'm going to do the same thing for business unit and say that blank values are allowed. Okay, so then once you do all those things, you have to activate it. So account structures gets activated. Okay, added to the batch queue. That's okay. We will see. Come back. It says activating, and I'm gonna refresh my environment session. Let's go back here. General ledger. Configure account structure. GS is now active. Now we could go back to the ledgers and add the configure stretch things. Yes. Okay. I'm gonna save that. Right. Now if we go back to the ledgers, it's always nice when you do that. You refresh that one. Now if you could edit it, you could see that account structures gets added. Right. Now only the last thing is allowed is adding the realization gain account, loss account, unrealized gain and the loss. Name itself suggests that it's either a loss to a company or the profit to a company. So what is this realized gain or the loss account? Just to give you an idea now, if I go back to the Excel again to show you that, right? So assume you have a vendor A, and you purchase something, and this guy is a USD vendor, right? Your operation happens in INR, but you need to pay him on the USD because he's a foreign vendor to you. You paid and you purchased something and for $100, right, on the 1st July 25. When you purchased it, when you book this, when you purchase it, what you're going to do? Either you create a purchase order, right? You create a purchase order, and you created a purchase order and you book the liability. And you book the liability on 1st July, right? July 1st. So $100 today, as per the exchange rate, is 100 into 85. System says that you owe him 8,500. Now today is the 17th July. This is the date because this is what the system has been booked. You always get a grace period to pay him, right? You said that on this vendor that okay, I will pay him with you in a 20 days. In the 20 days, I'm going to pay you. On the 20 days, when you're actually making a payment on the 20th of July, now the exchange rate is 90, right? Now you need to make a book a you need to make a payment on the through USD, right? Now you have to, that means that when you do a transaction, initial liability was 8,500 as per the book because after the INR, even though you're paying INR of 8,500, now because you need to pay it in a USD dollar, which is 100, now because it's now become the exchange rate has become 90, that means you need to end up paying the 9,000. Now the 500 is the difference. Book says 8,500 as a liability, what you owe him, but you paid 9,000. But initially, the thing is that in the USD column, it still says 100. That's what you paid. Because of exchange rate, there are something which you paid something more. In this case, it's a loss because you initially booked this as a 500, 8,500, but you end up paying 9,000. A 500 is a loss. It has to go somewhere. That's where we're going to mention it in the realized a loss account, right? So we're going to say that realized loss. Same goes, if this becomes 84, you have made a profit of 100, right? So that's what the realized gain account. That's what it does. Now, what is the unrealized gain? Assuming that you have a you have a payment terms of 60 days, right? So you made a you expense is booked on 1st July, but you're paying to the vendor on October 10, right? But ju- before this 10th October comes, you have a July month, you have a August month, you have a September month, and we also talked about ledger periods, right? This is all specific individual period. Now, sometimes what happens is the sense, for the finance team, they have to close the book or they freeze the book of specific month once there's all the transaction has been closed, so that people don't end up posting the backdated transactions in the system. To avoid that, they always get closes. Now, in this case, the 1st July is 2025, what is being captured as an expenses on 1st July. When it comes to the 30th of July, in this on the 1st July, exchange rate was 85, and from the 31st of July, exchange rate was like 31st July, and the exchange rate was like 92. But we have not yet paid. Still, this transaction is open, but we have to close this book, right? When we get closes on the book on 31st July, system takes consideration of 92 and it revises the what you need to owe him, right? It revises the bill. Initially, it's cost paid that 8,500, but when you closing the book, it end up becoming 9,200 because exchange rate of the 31st July was 92. It revises system automatically revises these values based on the new exchange rate. So it now says the system that you are not ending, you have to pay now 9,200 because your exchange rate got increased. Now the extra differences of 700 will be captured in the unrealized gain because it's not realized because you are not really made a payment to a vendor, but system is assuming that when you end up making a payment in the August, maybe because of new exchange rate, you have to pay a new values to the vendor. You end up paying more to him based on what initially has been uh, captured by the system. That's what this unrealized gain happens in the unrealized gain is when this exchange rate gets become lesser, so you'll end up getting a profit. If it is getting more, that's what it become a loss to you. When it become when the October comes, you're going to make actual book, right? Then it all gets reversed. Now system doesn't have any unrealized thing. System now understand is what really you need paid 31st July, so these values get reversed and system now captures the realized gain and the loss account. The system now knows that you have made a payment. This is the actual loss you have been incurred or the profit which you have been incurred. That's what it is. Now we're going to save that. With that thing, we have completed our ledger setup by creating a chart of account, fiscal calendar, account structures, currencies, and realized gain in the loss account. All right, that's a wrap for this episode. Up next, we'll kick off a procure to pay series and dive into the real business flow step by step. To make things super easy, I'm breaking things into dedicated playlist like order to cash, plan to produce, and finance. That way, idea is to know you can follow exactly what you need without getting lost. And of course, there will be some overlap into this each of this module, but don't worry, I will cover all these angles so it all makes sense as you go. Thanks for watching and give it a like if this helped, and we'll see you in the next one. Let's keep building your D365 skills one episode at a time. Thank you guys. Bye.